Harvest has done it again with some new, very nice single stock high income ETFs. In addition to that, they threw in a huge game changing ETF. Hold on to your seatbelts, folks. This is going to be a good one. If you are a dividend investor in Canada, you really need to be aware of the Harvest high income shares and what these ETFs have to offer for an income focused portfolio. Harvest is absolutely becoming the king of income producing ETFs, and they've got some real bangers joining the fray this time around. Harvest has just released 6 more ETFs to join their series of income ETFs called High Income Shares. This series uses covered calls with or without leverage on some of our favorite US stocks to really pump up some of those potential yields. They already had versions to cover some of our favorite US companies like Eli Lilly, Amazon, Microsoft, and, well, of course, Nvidia. They have now expanded the offerings to include Microstrategy, Coinbase, Palantir, Tesla, and Meta. In addition to that, they also added another ETF that may just be cooler than the rest. Covered call ETFs provide higher yields by selling call options on their holdings. This generates additional income via premiums. That's the fee the buyers pay for the option to buy that stock from you on a later date at, of course, a specified strike price. These fees can then be used to enhance the dividend. Of course, there is always a downside when you're getting a little bit extra on the side. And in this case, it is that in exchange for those fees, the ETF does give up some potential upside if the stocks rise significantly above that agreed upon price. In other words, they will tend to underperform in a strong bull market. Some of these new ETFs will come with a 25% leverage, which means the fund will use borrowed funds to increase their exposure to the underlying asset by, well, yeah, you guessed it, 25%. So if you invested $100 into the ETF, they would utilize $125 worth of the stock, which would be reflected, of course, in your returns either way. A sub to the channel leverages an unlimited amount of future content. I mentioned that they have also added a very special ETF, and it is a good one for sure. They have a new ETF that gives you exposure to 9 of their high income share ETFs in one single package. This is pretty exciting. So without any further ado, let's take a look at these new ETFs. 2 of these ETFs come in only a covered call option, and we will start with them. Out of the gate, we have Microstrategy. I'm definitely not saving the best for last. This is a really good one. Their covered call ticker, it's coming in the same as the Yield Max one, so MSTY. They have a management fee of 0.40%. That's a number you're going to see a lot today. Now, we do not yet have management expense ratios for any of these funds, so I'm definitely not going to provide you, or I'm not going to tell you over and over again that with each of the funds. Looking at their dividends, they have a yield of 38.74%, and that does work out to a monthly dividend of 24 cents. Of course, these are brand new, so we don't have any returns. The parent company, Microstrategy, now in their last year, they rose 584.21%. Holy banana bread, that's really good. So we're definitely expecting to see some promising movement with this one for sure. Microstrategy, for those of you who are unaware, they basically are almost like an unofficial Bitcoin ETF. They carry a lot of Bitcoin on their balance sheet, and that really, really does influence the direction of that stock. Up next, we have Coinbase, and the ticker for this one is CONY. They also have a management fee of 0.40%. They have a yield of 25.75%. Once again, another monthly dividend of 30 cents per share. Now, Coinbase is another company that has had a fantastic year. Their last year, they did 119.04% as a total return. So that's not too shabby. For those of you unaware of Coinbase, they are a big crypto exchange. So when crypto is doing well, you can be sure this company is probably going to be doing really well as well. And as a result, so will this ETF. Okay, now the remaining ETFs, they do come in a leveraged form with that 25% leverage I mentioned earlier. Let me also add that these ones do have covered calls in addition to that leverage. So we will start off with Palantir. They have a ticker of PLTE. Once again, management fee 0.40%. They have a yield of 29.70%. It's a monthly dividend of 37 cents per share. Now, when we look at Palantir, the company, oh boy, in the last year, they did 363.50%. So this is once again another huge company. Now, I will add that this one may be slightly controversial because, some of the things that Palantir do sort of aid in defense and military. So this one may not be for everyone. Next, we have Tesla. And their ticker is coming in at TSLY. This one here has a management fee of, yeah, you guessed it, 0.40%. They have a yield of 30.97%, and their monthly dividend comes in at 32 cents per share. Looking at Tesla over the last year, their total return comes in at 108.15%. That's not too bad either. And of course, Tesla is an AI and EV company, pretty big in the States, and they've had a good year for sure. All right, next we have Meta, and their ticker is coming in at METE. This one here also has a management fee of 0.40%. Looking at their dividend, they have a yield of 18.06%. It is a monthly dividend of 20 cents per share. Now, looking at their 1 year, that is coming in at 66.46%. And we're talking about Meta's 1 year, not this ETF. This, of course, is a brand new ETF. And of course, Meta Platforms, the company that this ETF invests in, they've had a great year. They're one of the few companies that have been showing profits. They've been showing profits with AI, and that's done them well for sure. So these are all great. But now we come to that special ETF, and it has a ticker of HHIS. Oh boy, their management fee does come in at 0%, but they are charging you the underlying fees to the ETFs that they're holding. So effectively, it works out to 0.40% when all is said and done. Now, this one has a yield of 23.38%. That's a 25% per share monthly dividend. And as I said before, they hold 9 of the Harvest High Income Shares ETF. So this one does give you exposure to all of them. And this is how it all breaks down. So you get Microstrategy 12.7%, Coinbase 11.6%, Tesla 11.1%, Nvidia 10.8%, Amazon 10.7%, Palantir 10.7%, Microsoft 10.6%, Meta 10.2%, and Eli Lilly 10.1%. I will add they also have a very small amount of cash and other assets or liabilities on hand, which makes up 1.3% of the fund. These ETFs, without a doubt, have very high yields that will make passive income investors very happy for sure. However, you do have to take into consideration that these are brand spanking new, and as such, it is hard to make a case as to how these will perform in the future. In the current market, I believe they will be okay, but as Harvest gets a chance to see how the money flows with these ones, you could potentially see a few minor adjustments. As an investor, it always makes sense to be prepared for the good and the bad with the market and never take anything, especially high dividends, for granted. I am beginning to have a strong feeling we may just get more of these funds in the future. If you are interested in any of these new Harvest ETFs, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Well, let's continue that learning journey. Check out this video on CNR, and I will see you in the next video.